Hey guys, welcome to the channel. Brad here. So today I want to talk about something that's getting a lot of traction on YouTube. There's a lot of young investors who are really excited about dividend stocks. There's all this about passive income, buying dividend stocks, and retire in 5 years with dividends. And guys, I got to tell you, I'm not seeing it. And I'm going to explain in this video why I see a lot of pitfalls when it comes to the dividend investing approach. So let's get right into it. Now, a company really has three options of what to do with excess earnings, okay? Earnings that aren't used just to maintain the existing business. The first one is they can reinvest those earnings to grow their business, okay? The second one is they can buy back stock. They can retire stock, which makes existing stockholders, it makes their ownership piece of the business worth a little more. The third option is to issue dividends, to send that cash out to the stockholders, all right? Now, as an investor, really the two ways to make money with a stock, you have price appreciation. So the price of the stock, of a share of stock, goes up. And the second one is you take dividends. You get cash from the business distributed to you through dividends. Now, what a lot of people don't realize is when a dividend is issued, after the ex-dividend date, which is the date at which if you buy a share in a company, you're no longer entitled to the current dividend payment. Once you hit that ex-dividend date, the price of a share of stock drops in accordance with the dividend that's going to be paid out. So it's not like you're getting this free lunch. When you get paid a dividend, your capital gains drops in line with what's paid out in terms of a dividend. So you've got to realize that. Now, the big problem I have with dividends, there's two. The first is if I'm putting my money in a company, I want that company to grow that money for me. Okay? I don't want it back. I want them to take it and grow the business. Okay? The biggest gains tend to be when a company really knows how to reinvest excess earnings, reinvest their cash into opportunities that generate 15, 20, 25% rates of return. I want the management of the company that I'm investing with to grow my money for me, okay? If they issue me a dividend, if they give me my money back, every time they do that, I have to decide how to grow that money, okay? And now, I understand if you're of retirement age and you're going to use that money for your expenses, that makes sense. But if you're a younger investor, the way you get compound growth, the way to really grow your money over time, compounding is the 8th wonder of the world, but the only way to take advantage of that compounding is to reinvest that money. So now I have to reinvest those dividend distributions. So, you might say, well, Brad, you could just plow that money right back into the company that gave it to you. And that's true. We don't know what the price of those shares of stock are going to be at any given time. If the price is going to be attractive when I get my dividend, if the price is high, then it's going to hurt my investment returns. Because, if you pay too much for an asset, you're not going to make as much money on it. And the other big thing here, if I get issued a dividend, now the company has to pay taxes on those earnings, okay? So say you get a 20% hit, okay? So you got $100 that the company has set aside to pay out in dividends to you. Now it's got to pay taxes on those. Say it pays 20%. Now it has $80 that it's issuing you, okay? So you get $80. Now you have to pay taxes on that $80, say another 20%. So now you have $64 to reinvest back into that business. Now, if the company had just kept the money without issuing a dividend, sure, it still has to pay taxes on that, 20%, but now I have $80 reinvested working on my behalf instead of 64. So you're getting double taxed when you take a dividend payment and reinvest it into the same company. So these are some issues that I have with dividends, especially for younger investors who are in the growth phase of their money. They want to grow their money. They don't need kind of the monthly income from a dividend kind of situation. So I think a lot of people who are getting into dividends, they just see, oh, there's money coming back to me from the company. And that's the extent of their analysis of the situation. In reality, the way that I invest, I really want the companies to be growing my money internally, okay? I don't want to be looking for opportunities all the time. If there's a company I like, I want them to reinvest. I want them to do their thing. And, if there's a buyback opportunity, often management is in the best position to know when the price of shares is significantly lower than the value of those shares. And that tends to be the time when buybacks are most attractive, when a company buying back its own shares is going to be of most benefit to a shareholder like myself. So, this is why I'm not crazy about dividends. I'm curious to hear from you. If you have a dividend investing strategy, what is it about these dividend stocks that's really attractive to you? And if you have any questions about the points I went over, let me know in the comments. I'm happy to jump in there. I don't know, maybe there's something I'm missing, right? So I'd love to know if there is, and maybe I can adjust my approach, fill in the blanks of my knowledge, because I don't know everything. All right, guys, that's it. I just wanted to share with you dividend investing pitfalls and the things you should really consider before you buy these dividend stocks. All right, guys, take care. Have a great day. I'll see you in the next video.